Hello and welcome everybody. If you are joining early, we're going to begin this broadcast at the top of the hour, but we wanted to have a small buffer to let everybody else join. So if you can sit tight, we will be starting in about a minute, minute and a half here. We are just about to the top of the hour, so we will be kicking things off very shortly here. Thank you all for joining so early and for your patience. All right, it is now officially 8 a.m. So I'm going to kick things off here. Hello and welcome to our live session. My name is John Ganji. I lead the change detection analyst team here at G2 Risk Detections. And as you can see from this title, today we're going to talk about what it takes to make sure that your risk programs stay in compliance, not only right now, but in the future as the fraud and regulatory landscape in this industry continues to change. We are going to cover a lot of topics and we're going to try to get them all done in about 45 minutes. And if we can move to the next slide, we're going to touch on our new brand identity just before beginning this presentation. For those of you who have been around a while, this is a reminder that back in January, we and our sister companies, LCI and Fintelix, joined together under a new master brand. So the name you're going to hear from us going forward is G2 Risk Solutions, and you may hear me use the acronym G2RS to refer to that. If you don't know us or you're new to the industry, welcome to the presentation, and I'm very glad you found your way here. It takes a large group effort in this industry to stay on top of fraud and regulatory practices, and we're very happy to do our part today. If you're just getting to know us, G2RS pioneered merchant monitoring 20 years ago, and we are still the leader in providing merchant boarding and monitoring solutions. So before we get into the meat of this, we're going to do some quick housekeeping and introductions. If we can move on to that slide. First, we have a brief disclaimer and liability waiver from our legal team. As you may expect from a public webinar, the information we present is general only. It is not professional or legal advice, and if that is the advice you need, we encourage you to seek out independent professional advice that is relevant to your specific circumstances. Finally, G2 Risk Solutions is not liable or responsible for any injury, loss, or damage of any nature incurred by the use of the information in this presentation. We can move on to our housekeeping. We just have a few more items to cover. We are going to be taking questions, but please submit them anytime through the session. You won't hear us answer them until the very end. If you would like a copy of the slide deck, it's available by clicking into the GoToWebinar handout section, and you'll find it there along with some information on a couple of the G2RS solutions. Finally, the session is being recorded, and a link to that recording will be sent in a follow-up email from our marketing team. You can also find it on our website. Now we're going to get a little bit into the meat of it with some introductions on our speakers today. As I said previously, I'm John Ganji. I'm the head of an analyst team for the change detection solution here at G2 Risk Solutions. And we're very lucky to have two industry veterans with us today. First, we have Annabelle Pisani. They serve as the group head of risk and fraud at Trust Payments, and they've been in that role for 4 years. They are responsible for the group monitoring of acquiring business and have various tasks, including fraud protection, AML prevention, and process improvements within their risk team. They have a very well-read banking background. They've served in managerial roles for a Maltese commercial bank for over 20 years now. She's been a contributor in choosing and implementing multiple systems to help with risk mitigation, monitoring, and process improvements. She's very passionate about sharing her work experience and best practices with others to help all of us get even better. The other speaker we have today is Julie Schwartz, who is the Vice President, Senior Compliance Officer at Esquire Bank. She has over 10 years of payment industry experience and adds value to the business by ensuring compliance of payment network rules and standards and manages the reputational risk of their portfolios. She's worked closely with payment networks, service providers, and merchant business partners to assist with all of the legal and regulatory compliance issues in a merchant portfolio. She is responsible for investigating, understanding, and conducting bank compliance activities related to payment network processing and establishes disciplined operational and managerial approaches. She is a very active member of the Association of Payment Professionals, previously the MAC, and has served for multiple years as a member of the Risk, Fraud, and Security Committee for the Electronic Transaction Association. So with all that established, we're going to get into having these two answer some questions for us. If we could move on to the next slide, please. So the description for this webinar has mentioned that not every payments business has an individual solely dedicated to card network compliance, but in today's regulatory landscape with constantly changing regulations and increased enforcement, we do feel that it's really a best practice. And now that we've introduced our two veteran speakers, perhaps each of you could elaborate on your role and the importance of having a system in place to ensure compliance. Annabelle, if you wouldn't mind going first.
Yes, hi everyone. Definitely, I believe a compliance officer is very important to make sure that any mandates, changes, and regulations as received by the schemes are picked up in a timely manner, and making sure any development changes required are delivered by the set time frames. Usually, we get these mandates 3 months in advance, so it gives us time to do any developments on the systems. But at times, we might need to ask for any extensions. They might be granted, they might not, but there were instances where extensions were required. Basically, as much as possible, we need to be proactive rather than reactive on these things. And this is an ongoing task. Task cannot be one-off, so basically that's why a compliance officer is important to basically manage this and make sure that it is being followed as required by the schemes, and maintain the relationship between the acquirer in our case and the schemes, and keep them updated accordingly. Also attending any QBRs, quarterly business reviews with the schemes. So basically those are generally led by the compliance officer. Having said that, it's not the responsibility only of the compliance officer, but each individual within the organization need to make sure that they are performing the tasks as per compliance requirements accordingly. It's not just the compliance officer responsibility.
Well, thank you very much for that very knowledgeable answer. It sounds like the compliance officer is very critical to establishing relationships, not just within the industry, but also with the card schemes. Julie, would you be able to elaborate a little on that?
Yeah, and Annabelle's correct. You know, ensuring that the compliance team works with the various stakeholders within the business. It's also important that they understand that they share how important compliance can be. The business is kind of trucking along, you know, they've got their risk department, they're doing their underwriting, they're doing their portfolio review, but, you know, compliance kind of sits just on the edge of that. And it's important that the compliance department is embraced for some of the knowledge that they're able to provide. As an example, so recently many acquirers and ISOs, they've been getting potentially notifications from the payment networks regarding merchants and surcharging. So this is kind of one of those fields that kind of sits right outside the whole risk and underwriting group, right? So the rules and the standards from both the networks and the state regulators is a very difficult landscape to navigate, especially when it comes to surcharging. So while the compliance teams may have that great standing with the networks to be able to remediate any of the non-compliance merchants, they also have to work with the management team for them to get to understand the whole breadth of what's involved with that, and having consistent messaging being relayed out to their partners regarding compliant practices. A lot of partners want to try and get a little creative with trying to stay compliant, but working side by side with the compliance team, not only can the compliance team help stay creative with you, but it's also just to kind of help guide you with that. They also have an opportunity potentially to review some of those third parties marketing materials, especially when it comes to surcharging. Again, they get really creative. So having your compliance team work with those providers when it comes to their websites and any of that marketing material, it's really key to make sure that it's accurate and not misleading. So as Annabelle said, you know, being proactive rather than reactive is very essential.
So it sounds to me like they are most important as a nexus of information. There's new information coming all the time, whether it's being pushed from the card schemes, from your business partners, or from individual businesses. And without a either sole compliance officer or a team dedicated to compliance, it's easy for any of these individual things to get lost in a game of telephone. Does that sound fair?
That sounds fair. So the payment industry, it's constantly evolving. So not only do the fintechs push out continuously new products and technologies to their merchants, the payment networks are also right along with them, pushing out new businesses to potentially support their issuers. So new technology, new product offerings may go into the market with great intentions. So I'll say maybe something like buy now, pay later. Great novel idea. However, over time, we all needed to learn how to put rails on those types of product offerings. The same was true for back in the day when PayFac started coming out. It was a grand novel idea. Again, some rails needed to be put in place. Adult, the crypto model, that was just a guns blazing coming out of the market, and then quickly regulators needed to come in and put some controls in place, and the payment industry needed to be reactive to that. So this when you think about having that compliance team, they're going to be the ones that are going to be trying to stay in front of all of those new nuances that are going to come in place. And the payment industries and those payment providers, they're going to need to readjust over time. And additional tech, additional staff, there's some know-how that's needed there to be able to continuously support that program. I'll say one more quick thing. There is a difference between, and again, I've kind of mentioned this in the beginning, between the risk and underwriting team and the compliance team. So understanding as a whole what your portfolio looks like from not only a compliance perspective, but also as they do their reviews, it's essential to make sure that there's that relationship between those teams to, again, to nourish those partner relationships. The industry is all about trying to find ways to bring more merchants forward to be able to make a profit, right? We're talking pennies on dollars here. So being creative with the compliance along with the risk and underwriting team is really essential.
Also, if I may add, during monitoring, so if the monitoring team captures any trends, it is important the communication with the underwriting and the compliance teams to look out for these things for the future, obviously to improve the quality on the books. So, and also if there is the opportunity, we share best practices with other issuers, acquirers, So basically, that's all about fintech and the payment industry.
So we've talked a lot about Rails needing to come into place later, needing to watch for trends, regulations getting updated, and I think that leads us very well into our next slide, where we're going to talk about how you stay compliant both in the now and how you adapt to changing regulations, but also how you plan for how those regulations might change in the future. Julie, can you speak to that for us?
Sure. So I think it's discussing the risk appetite or understanding what that risk appetite is for the business. Having those policies and procedures in place, understanding what's your medium, high, and low risk. Also, what is prohibited and not prohibited. Understanding where your hard no's are, and then where there could be exceptions to the rules. Again, we're all looking to make sure we're protecting our reputation, but we're also trying to protect ourselves from any losses. So understanding the landscape of the portfolio is essential from a compliance perspective so that they're able to support the business to be able to make those tough decisions. There are some great ideas that are brought to acquirers and banks and whatnot with some great novel ideas. However, sometimes those have to be fleshed out. Sometimes, you know, the whole picture, it's got multi facets a part of it. And so maybe one part of it's compliant and there's a good checkbox there, but maybe there's another section of that business model where it's like it's trying to walk the line between two different models, potentially non-compliant. So again, it's understanding what you have a risk appetite for wanting to bring that forward. A couple other things to think about is there's a big difference between what the card brands have from their rules and perspective versus also what the government and the regulatory side has. So while, again, surcharging is a good example, you know, while it could be compliant in one area with the card brands, it may not be compliant within the certain state that it's operating in. So being able to help the business understand that concept between what the card brands and the regulatories is just as essential as understanding the enforcements of those different rules. I'll tell you one thing that I saw as an example, and Annabelle, you might be able to share some too, is originally when crypto hit the road, like I said earlier, NFTs were also right along with that. And it was interesting, in the early days, there was concern that NFTs were crypto. And granted, they are on the blockchain and they are considered or potentially could be considered part of the crypto. The card brands and the compliance people, they were able to kind of come together and decide that actually it's a digital asset and be able to put it in a certain MCC that everybody felt like there would be good acceptance rates across the board. So having that understanding with those conversations with the card brands and the regulators, there became a happy medium there where they decided, okay, NFTs, they're good under a certain MCC versus crypto cells, you know, those obviously needed to be under a different MCC. So again, understanding that risk appetite for what you're comfortable with is really essential. Annabelle, do you have any other instances that you saw?
Yes, to add to that, I believe something we're seeing lately is CBD. So basically, different regulations, different countries, whilst the schemes say other things. So it is a challenge. You have to treat CBDs differently, certain currencies. So it's very important to have, if it's possible, to have the right monitoring tools in place in order to help you capture these things. For example, THC levels, and if possible, you can adapt different rules to different regulations, to different portfolios. So yes, CBD is always changing. We have to keep updated with the industry trends and with the regulations.
I think this really highlights what we talked about on the last slide, the importance of communication and having somebody in charge of that communication, because there's a lot of trend monitoring going on, but it sounds like one of the most important aspects to making sure that you're prepared for what's coming down the road is talking to the people that are going to build what's coming down the road, whether that's with the card schemes that are going to be introducing the new regulations, or talking to your businesses that are going to be attempting to sell new things, offer entirely new types of products, things like that.
Agreed.
Does that
100%.
sound about right? Yeah.
Yeah, 100%.
And that will bring us to our next slide, which is the importance of staying up to date with your merchant policies. Those are going to be the key to consumer safety as well as your safety from a compliance standpoint. And as Julie touched on earlier, businesses not only need to adhere to card network rules, they need to adhere to state regulatory rules. They need to adhere to your own acquiring rules. Julie, can you speak a little bit as to how you make sure that all of these are being maintained?
When you look at, I think it's important. Let's think about that. So it's important, again, to what Annabelle said, is the monitoring side of things. Understanding that these policies and procedures are already in place, but understanding also that as you rock along throughout the year, that you take that opportunity to go back and look at those merchants that were initially onboarded and approved, and ensuring that they're still within the scope of what you anticipated. So a good example would be you board a convenience store, and 2 years later you find out that they've kind of morphed their model into actually being a shop that sells vape products and whatnot. Maybe that wasn't originally on the plate when it was originally underwritten. Also, when you look at potentially, if you've got a PayFax and they've got a whole bunch of sub-merchants, and the sub-merchants were all going to be in that restaurant business, and that's what you anticipated, and you kind of tagged it as being a low-risk portfolio. Now they've come along and they're starting to board more maybe card-not-present merchants of some sort. So now they're changing that risk appetite. So to ensure that you're also staying within your own policies and procedures with the monitoring, it's also making sure that that risk appetite that you originally signed up for is being within that scope of what you initially wanted.
Got it. Yeah. So there's a lot of adaptations that for a business might feel natural, or even if they don't necessarily feel natural, they might certainly feel like they're allowed to do it because it doesn't go outside what they understand to be the state and federal regulations. Annabelle, can you elaborate on that a little bit for us?
Yes, agreed. So basically, the business might try to do it, and then it's up to us to capture that, speak to them, and explain why it can't be done if that's the case, or else they need to get further authority, further licenses maybe. So I believe we are here also as an acquirer. I can speak to educate our merchants. We can detect basically things using our tools, but then we can educate our merchant and explain why we cannot tolerate such activity. It could be done intentionally or not. But definitely, first thing, we should try and educate them, explain, and then if they do not fix things, obviously, we have to always protect the acquirer in this case, and be compliant at all times. So education is very important.
Agreed.
Yeah, there's a lot of gray areas, particularly in emerging industries. Julie, do you have any examples of specific industries where you saw a lot of gray area? You know, merchants that weren't necessarily doing anything wrong, but were trying to navigate a space where the rails weren't laid down yet.
So one thing to consider is the firearm sector. So again, that came out where recently there was some new regulation regarding ghost guns. So ultimately, at one point, most firearm merchants were rocking right along with the little MCC that they were putting them under, and everybody was good. Regulations came out, decided that any firearm that could be built into a gun, certain parts needed to be serialized, and in order to be able to serialize them, you needed an FFL, a federal firearm license. So again, navigating that landscape where understanding that you have to now go back through your portfolio and go, okay, we have all these merchants that were selling firearms. Are they now going to fall under this new rule where now we have to require that they get the FFL? And then it's now having that conversation with them of like, hey, you've been considered this, now we need you to go take this extra step. A lot of merchants who are in these industries are very familiar with the rules and the regulations that they sit under, and most are very much willing to comply and do whatever it takes to stay legal. But you do have some of those rogue merchants that decide, you know what, not going to play in this space anymore, and they exit it. So I think that was a good example where understanding the nuances of something new that came out and how it impacted some folks' portfolio.
I think that also speaks to how you can't necessarily focus on watching one specific piece of information. I know I referred earlier to watching merchant policies as a whole. That is a very wide breadth of information, and the things that merchants will change to potentially fall out of compliance are very disparate. It's specific to industries, it's specific to individual businesses, and many times you'll need to be able to sort of bridge the gap between multiple industries, particularly if your business is trying to branch out. Do you have any additional thoughts on that, Annabelle?
Not really, basically, but my view is you can pick up these things from URL monitoring, because you can't keep on reviewing the merchant policies at all times. So basically, these are picked up in the compliance reviews, fine, but on a day-to-day basis, reviewing the URLs and what actually they are selling.
Mm-hmm. That's a very good point. And if we can move on to our next slide, another important idea to talk about is it's not just about what they're selling, it's about what the businesses are doing and how people feel about what the businesses are doing. You're going to face consequences not only for what a business does, but the public reaction and perception of what that business does. There are meaningful consequences for being associated with somebody that has a negative reputation. So Annabelle, could you speak to us about how you make sure that your reputation is protected when you're working with merchants that are high risk?
Okay, first of all, obviously at underwriting. So as soon as you onboard the merchant, definitely underwriting needs to be looked into in detail using the necessary tools. There are certain tools that cover specific MCCs, high risk MCCs, in the likes of crypto. For example, we do use specific tools for crypto. So basically, before accepting a merchant, you have to do full analysis, not missing out anything. But it might also be tricky because you're not seeing the actual transaction. So some things might go through at onboarding. Obviously, some merchants are knowledgeable in this regard. And then strict monitoring. So basically, the activity initially needs to be monitored closely for high risk MCCs to see any patterns. For example, if it is, I don't know, a training MCC, and we are seeing transactions with gaming patterns, that could give you a good indication that they might be doing something else. Again, when I'm mentioning all this monitoring, it's by the use of systems. Nowadays, the acquirers can help merchants also to apply rules for them to monitor accordingly. So even if merchants are not big enough to control fraud, etc. themselves. Again, I'm mentioning website monitoring. It's very important to monitor any changes since onboarding, whatever was changed on the website. Some things might be irrelevant, but others might give you a good indications that they're doing something which we're not aware of. Adverse media alerts, if they were maybe there is a regulatory alert against these merchants, they're not authorized to transact in a certain jurisdiction, and they are. Licenses, we make sure that the licenses do not expire, these kind of things. Obviously, it's in our interests to monitor these because the schemes also monitor this, and if they find anything which is not according to the rules, we might get fined. There's our reputational risk as well. So basically, we are responsible of our merchants' activity at the end.
Yeah, so back and forth is very critical, not just between you and the card brands, but also with you and the merchants, particularly merchants that, as you said, are not yet large enough to have their own compliance officer or their own compliance team. And that is where it becomes your role to sort of step in as the older sibling and say, hey, please don't do that. That is highly illegal. Please do not. Julie, do you think you can elaborate on that a little bit?
So I've seen an instance when CBD was hitting the market. Obviously, we're all still seeing CBD become more and more prevalent in the industry, but there was a time when it wasn't as prevalent and it was still an emerging market, and people, I've seen an instance where the merchant understood that it was legal in their state up to a certain percentage, and so they were able to sell water that had CBD in it, and they bought cases and cases and cases of it and put it up on the shelves. And potentially, you know, the acquirer, the bank, was not comfortable with supporting CBD at that time because it was still too new and too not, you know, kind of thought of in the industry as something that could be out there within the controls. And so having that conversation with that merchant saying, sorry, you need to take all that product off your shelf, and them going, but we understood it to be relevant, you know, to be legal, and we can, you know, have it here, and the guys down the street are selling it, and so what do we do with all these cases of water? So again, it's just making sure that you stay on top of and then trying to have those conversations sooner than later, before then there becomes that reputational and monetary risk being put in place.
And in this case you're mentioning, Julie, it could impact the merchant's liquidity. So again, it will fall on us because obviously profits, revenues, etc. So yes, it's a chain, basically, one thing affecting the other.
Yeah, if you lack that communication, there's always a risk that the merchant will go a little bit AWOL and stray a little bit outside those regulatory things. And while the CBD water may have ended up okay, you know, sometimes those situations blow up in your face. And then not only is the business hurt, you get hurt, fines may come down, and that sort of damage can be much longer lasting than just how much money it costs you. Do either of you have any additional thoughts on the monitoring landscape of reputation specifically?
I'd like to add that having a good relationship with the networks is very beneficial. It can be tricky receiving notifications and just preparing those responses day in and day out or on a weekly basis. But to establish that connection with that team that you're dealing with is really crucial. I highly encourage folks to reach out to those teams at the networks and ask if it would be beneficial to have maybe a regular scheduled meeting. You know, maybe once a month you kind of look through all the violations or some of the notices that you've got and make sure that you're staying on top of them and making sure that, you know, there's not any patterns there that maybe the networks are seeing that they can maybe share with you as the acquirer or ISO or even the service provider. Having those connections is very helpful. Also, if you get the opportunity to be engaged to complete a MasterCard FMP or a Visa VIRP, a VERP review, come prepared, ask questions. You know, the more you come forward with showing that you want to be a good partner of the business, it's a great opportunity that it's showing that you're willing to learn some best practices. And then one last thing I would consider from a reputational standpoint is attending the various payment industry webinars and seminars like today and whatnot. They can go a long way for your business, especially if your name is kind of out there known. The payment industry see that you're at these conferences because they're there too. So having FaceTime and a good handshake can be very powerful.
Yeah.
Very.
Yes, sorry, agreed. And also your presence in certain conferences and sharing again best practice. You'll get the opportunity to speak with other merchants and discuss any challenges at their end, at our end, and we'll share. And you'll be surprised the improvements from these from these conferences, because even if you're speaking over a coffee, yes, these things do help, I believe.
So really the overarching tentpole is you need communication, and you need a, at times, overwhelming amount of information. And you need somebody or a team of somebodies who can process it all and relay it to the various stakeholders. With that said, we are going to move on to the Q&A portion of this webinar. So I can see a few questions coming in already, but anybody who has any questions for our very knowledgeable panelists, please do send those now, and we will get to as many as we can as they come. The first one is, how often are schemes sending out these new mandates or conducting these audits? I think, Julie, you touched on that at the very end, but how often are these various, notifications coming through?
So I would say from what you would call merchant violations, and when I have seen in my experience, especially within surcharging, I think there's a steady practice of the network sending folks out into the payment ecosystem and doing some testing, and I think that's actively going on now. And then when it comes to the VERP reviews, my understanding is that they can do those between annually to every other year. I think it depends on how big your portfolio is. I think it also depends on how many taps that you've been given in the past year. I think the networks look at your portfolio as a whole. They're going to look at the chargebacks. They're going to look at your violations. They're going to look at your processing. They're going to look at how many of your merchants are registered, maybe not registered. They might even look at some of the data integrity stuff. They'll look at it, everything from a top level down, and then make those decisions there for when they're going to actually come out and tap you and send out some of those notifications. That's been my experience.
And what about you, Annabelle?
And also, as Julie was mentioning earlier, it's good that we keep the relation with the schemes. So you would know from updates you get, meetings with the risk teams, you would know if we need to improve on anything, or you'll get a notification soon, or you have high fraud, high charge, but there's no need to tell us, but at least we will be pre-advised that we will receive certain notifications. We shouldn't be surprised with these notifications, because we should be on top of things, and we are aware of any merchants which have high fraud, high chargebacks, So basically, if we do have a proper risk and compliance team, we should be aware and try to mitigate and do something not to receive these notifications. Even if it's an early warning, we should act upon it immediately, not wait until it's an actual warning. So that's why how important it is to have a compliance team, a risk team, to be on top of these things, because all this leads to, as we said, reputation and fees.
Yeah, as stressful as they are, these notifications, they should never feel like a trap's being sprung on you. They are a regular and at many times predictable meeting with the card brands to make sure that everything's happening above board. And as long as you're communicating with your merchants and with them, you can both be aware of roughly when it's going to happen, and you can make sure that it's going to be friendly. Continuing that theme of what the card schemes are doing, what do the two of you see as a current focus or industries that are perhaps getting a little bit additional scrutiny? Annabelle, I'll have you take this one first.
Sorry, can you repeat the question? So I missed that.
Yeah, it is. What do you see as a current focus from the card scheme, whether that's a particular industry or a particular type of question that they ask a lot, or is there a particular focus?
From the mandates, I note basically they do observe and get feedback from different acquirers, the payment industry, and issue mandates accordingly. For example, I can know chargebacks is all the time developing. They are changing things all the time. Also, recently, MasterCard basically issued a mandate regarding authorization attempts. It was something Visa had already. They did the same because before it was just quoting thresholds daily, and now they went with the monthly ones because of the high level of declines. I can't say they're focusing on something specific. It's mainly phases, I think. But chargebacks all the time, it's evolving all the time. So most of our mandates are related to chargebacks. So
Thank you very much for that. Julie, what about you?
So Annabelle's right. They do look a lot at when it comes to the technical side of compliance. I've always thought of compliance in those two different realms. There's the practice of making sure your authorizations and your clearing files are all good and clean, good data integrity, and whatnot. Then there's the other side where you're talking about the brand damaging stuff. So talking about violations for illegal content, some fraud trends that are out there. So in my experience, I see there's been a lot more scrutiny when it comes to certain business practices that the merchants are engaging in, making sure that they're not out there actually causing consumer harm is where I'm seeing most of the noise. And then interesting enough, making sure that if you have a high risk sector, take a look at that portfolio and make sure that your merchants are properly registered. There's some fuzzy logic out there that they can run and take a quick look at your portfolio and quickly determine whether or not there's somebody there that's not, there's somebody that should be there that's not. So I've seen some recent communications regarding those two areas.
Interesting. I can see we have a couple more questions coming in, so I will move us along to the next one. What are best practices for this type of periodic merchant review, both your scheduled diarized ones and then ones that come up due to trigger events, whether that's a notification from a card brand or you see an article in the news? Annabelle, can you share with us first?
Basically the best practice, it should be scheduled in the diary. So basically periodic reviews, you need to assess a way how to get triggered. So basically, obviously, if it's a high risk merchant, it will be reviewed more frequently than a low risk merchant. Basically anything, if you get a notification, obviously you will have to, even if the periodic review is not due yet, you have to obviously review. Also, any alerts you get from any systems we may use can trigger you to do any reviews, or else an adverse media. So basically you get a regulatory alert that basically this merchant is not licensed to do activity in this particular country. You have to review not just that particular country, but all the activity. and how it impacts, obviously, the volumes. Until you do the investigations, I suggest to hold any funds for that particular merchant. Also, if, for instance, there are a number of factors, I'm just mentioning a few. If, for instance, all of a sudden the merchant stopped processing, so initially they were processing daily or weekly, and all of a sudden they stopped. So you should have all these basically alerts in place in order to attract your attention and investigate accordingly. Obviously, in that case, if the merchant stopped processing, if we hold any funds, we should keep those funds until the investigation and any questions to the merchant are answered to our satisfaction. Don't be scared to keep asking. We do have the right to ask the merchant, our customers. We're doing our job, and basically, if you're not happy with the reply, keep asking until you're happy, everyone.
So you talked a lot about reviewing alerts, asking the merchants questions. Do you have a standard suite of things that you review, or are you tailoring these to individual merchants or individual industries? Or is it more of a blanket, this is how we monitor everyone?
So there's a blanket set of rules, but certain MCCs do have specific rules. So basically, there's the standard, for example, a sanctioned country is for everyone. But then there are, for certain MCCs, say gaming, they do have specific rules for that particular MCC. These rules are aligned with the policy, with the regulation, with our risk appetite, etc.
Got it. And Julie, can you share some of your best practices?
So the other thing to think about, especially when it comes to triggered events, so you get a notification from the card brands. I would say look at the chargebacks. If they've got chargebacks, you can actually go read the actual dispute from the merchant. And that can be very telling at times when you look at the complaints from the actual cardholders. You might learn there's something more that merchant was doing that you can't see within that processing volume. There's nothing wrong also with doing Google reviews, even doing some, like I said earlier, you boarded a convenience store, and originally those original photos, everything looked good, and now you go back and now they've got a big old, picture of something on the front of their doors that you didn't realize that they put there in the second place. So doing that deeper diving, and then also looking at price points. So if you look at the transactions and you know that their price products are typically 10 to 15 or 10 to 50 bucks, and you're seeing a lot of high value transactions coming in, that could be something else to think about. So when you actually are looking at triggered events, diving really into the processing volume and into those chargebacks can really be a telling story.
Got it. Thank you for that elaboration. That is going to bring us to the end of our time. So all these additional questions, we're going to follow up with you over email. Thank you all so much for joining us today. Thank you, Julie, and thank you, Annabelle, for coming and sharing your wealth of industry knowledge with us. It has been a pleasure, and I hope all of you have a great day.
Thank you.
Thank you.